I'm going to share with you a very easy strategy for Forex trading that can make you 5% balance increase every single day if you do it right. And more importantly, this is a scalping strategy, which basically means that no matter what, you are going to have opportunities to trade in pretty much every single pair, or at least the pairs that I'm going to recommend you, but you're going to have lots of trading opportunities if you actually understand the strategy. So I'm going to teach it in this video right now. Hey everyone, Christian here on YouTube. Welcome to a brand new video for the channel. Today, I'm going to teach you the best scalping strategy for 2024, which could make you 5% balance increase every single day if done right. But hey, if you're new to my channel and you're into day trading, Forex, crypto, any type of making money online, this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification of every new video that I upload. With that being said, let's begin. What is scalping? For those of you who are not familiar with Forex trading or with scalping trader, what basically scalping trading is a way of trading where you use small time frames. So usually day trading is actually when you place a trade and it takes the whole day or sometimes the next day, and you use 1 hour candlesticks most of the times, 15-minute 1 hour candlesticks. Swing trading is when you actually leave trades running for days or sometimes over weeks using 4 hour and 1 day daily charts. But scalping trading, you can use it with 1 and 5 minutes in order for you to have fast entries that are going to take sometimes even 30 minutes, maybe 1 hour or something like that. And that's pretty much it. Sometimes you even close it within 10 minutes. So scalping trading is a way of trading really fast, taking advantage of certain opportunities, getting in and getting out quickly, right? So that's what scalping trading is. Now, let me just go ahead and explain this strategy to you so that you fully understand exactly what I'm talking about. First of all, this is a trending strategy that basically what it does is that it allows you to actually take advantage of the actual trend of the market and use a continuous trade on that trend. What I mean is that if the price of an asset is actually going down, like it's happening right here, then it's basically a downtrend. So there's no reason why we should trade against it because the strength of the actual trade is actually going down. And the opposite happens whenever there is an uptrend. There's no reason why we should enter a down position because we are trading against what the momentum is actually happening in the pair. So what I do is that I actually take advantage of the trend in order for me to actually make money. How do I do that? It was actually quite simple. Whenever you actually start trading with this or any other strategy, you need to actually find a certain entry for your trade. Well, the entries in this strategy are actually found by finding retractions. How do I mean retractions? If the price is actually going down, it's not going to continue going down the whole life. Sometimes it's actually going to make a retraction, then it's actually going to continue going down, then it's going to make another retraction, continue going down, continue a retraction down, and so on. This is considered a support and resistance strategy because the lowest point is a support level. This is a support level. Let me just switch the color. This is a support level and this is a resistance level. Whenever you find a support level that gets broken like this one right here, the same support level becomes a resistance, which means that when the price actually breaks that, it's actually going to come back and use that as a resistance to continue dropping. Now, as you can see, there's a new support level here and it becomes a resistance and so on. That's what's going to continue doing. Now, the strategy itself sounds pretty easy, right? And you can even understand that there are many strategies teaching you that, and more importantly, like literally I have it right here in my mouse pad. But what's really important to understand is what indicator can help you understand those retractions. And I've actually found that the best indicators to do that is the RSI and the stochastic oscillator indicators. As you can see right here, I have the RSI right here and the stochastic oscillator. Now, when it comes to the stochastic oscillator, all we need to actually wait is for movements when the actual moving average, this is the orange line, right? It's always doing this. This is orange. And the blue line is always doing this. crossing up, crossing down, crossing up, crossing down, right? Now, these movements happened all the time with the stochastic oscillator. Now, when the blue line is crossing on the direction that the blue line is actually crossing, that's where the candlestick is supposed to go. What I mean, if it's crossing going up, we have a green candle. If it crosses going down, we have a red candle, okay? Quite simple, right? So the reason of this indicator in this strategy is to determine when the price could actually drop or jump, so that we can either enter for the continuous of the trend or wait for the right moment to enter. That's the function of the first indicator. Function of the second indicator is the RSI. The RSI has 3 levels: 70, 20, and 50. The 70 is the highest and the 20 is the lowest. 30, sorry. 70 and 30. Now, this 50 level that you see right here, which I'm going to highlight in a different color, is basically what matters to us. You're going to realize that whenever there's a downtrend, like it's literally happening right now, the price is going down, the RSI moves in this area, the below the 50 level area. There are going to be moments when the 50 level is going to be reached, and guess what? The price is going to drop. Then it's going to continue in this area, it's going to reach, and it's going to go down, and so on. That's with a downtrend. If it's an uptrend, happens exactly the opposite. The actual moving average of the RSI moves in this area all the time, and then it touches the 50 level and continues. It touches the 50 level and so on. What is our entry point? Our entry point, it's literally when the 50 level is actually being reached. Pretty simple, right? When the price is being reached, that's when we enter. Really, really cool. Now, let's go ahead and take a look at an example right now. Let me just delete this. So I'm gonna teach you right now how to choose your entries. Super simple. I'm in USD CAD. I'm in 5-minute candlesticks, and this is a downtrend, right? The price is going down. The RSI is below the 50 level. So what is it that we do? We are actually going to wait for the RSI to actually reach the 50 level. So it's not happening, and now it did happen, right? Literally right here. What happens is that I wasn't like active at this moment, so I couldn't place the trade. This is an old trade, by the way, that I placed. But 2 criteria are being met. Leave alone the trend. That's obvious, right? But one criteria is that the RSI 50 level was actually reached. But the second criteria is that the blue line on the stochastic oscillator is in a position where the price is supposed to drop. What happens if the actual blue line is below the orange line, like it's doing this? There you go. It basically is preparing for a jump. So we don't want that. We want this, that the blue line is above the orange line, because it's preparing for a drop. Does that make sense? So those are 2 criteria that have to be met for us to actually enter. Like I said, I wasn't active at that specific moment, so I couldn't enter. But then the price might give you a new opportunity, and that's what we're looking for. This is a great example as to why I didn't enter at this point right here, because it's literally the stochastic, as you can see. And let me move my camera a little bit because it might be on the way. There you go. So as you can see, the blue line is actually jumping, so it's not dropping. Then I'm not gonna enter there, right? So I continue watching. Now it's actually reaching the 50 level, and the stochastic already crossed up. So that's the moment that I can enter. As you can see, this was my entry point, and it continued to go up a little bit. You know, this is the entry. Now, how do we choose the exits, right? So I chose my entry based on the RSI. Good. How do I choose my exits, which means my stop loss and my take profit? One thing that I love to do is to analyze after the entry, like what are some levels that have been reached before to use as a reference. And as you can see, this level that you see right here literally was this level in here. This wick that happened before, and it was respected here, here, here. That was a new resistance. So I was like, okay, that's going to be my stop loss level. And the take profit, I decided to go 4-1. I could go more, I could go less, but this time I said no, 4-1, because the price has actually reached this level lately, so it could be a great option. So we continue looking at the trade and take a look, the big drop. We wait, we're patient. The price continues to go up, even gave us a new trading opportunity, a new entry opportunity, if in case you missed it or something like that. And then eventually the take profit gets touched, right? So you have, in this same setup, you have 1 entry, 2 entries, and 3 entries in the same level. Pretty cool, right? So that's how you actually choose your entries and your risks. Now, Chris, how do you choose the risks? What I mean with the risk is pretty much how much money should you place on every position. And this is actually super important. Look, if you're going to be trading with your own trading account, basically you can go 1-2% stop loss risk percentage. But if you're trading with a funded account, you shouldn't go that. You should go with 0.5%, for instance, right? Now, what's the point of this strategy is to actually make it simple, but you cannot risk that much into every single trade. So my biggest advice is go, again, if you have like the real account, your real account, 1-2% per trade is good. And the funded accounts, 0.5 would be maximum that I would go with this or any other strategy. But the risk is actually measured by the stop loss level, right? I don't want to go like old technical in regards to this because I have a lot of tutorials in regards to it, but the risk should be around 0.5%, focusing on the funded accounts, or even you can do the same with your real account. 4-1 can actually give you 4 times what you risked. So if you risk 0.5%, that can give you 2% balance increase. You already know that in order to pass a funded account, you only need 10%, right? And you saw that I used this strategy in order to pass a funded account in less than a month of $100,000. I had a video in regards to it. You can go ahead and look it up. So my biggest advice is, in order to choose the risk, I would go with 2-1 if you don't feel that confidence, or 4-1, but doing some closing partials and stuff. So the strategy works like a charm on 2-1. It's pretty simple, actually, 2-1. So you lost 0.5%, but you can make 1% in return, right? 3-1, if you feel a little bit more confident, it's pretty easy too. Or 4-1 if you actually are experienced. But if you ask me, I would go 2-1 or 3-1. That's it. You don't need to do more than that. But that's my advice on choosing risk. Now, in my video, I actually mentioned that you can make 5% balance increase per day. Why is it that I think this is possible? Because look, these opportunities that I just shared with you appear all the time. This and pretty much anywhere on every single pair. Take a look at this one right here. You choose the stop loss based on the last highest, which I would say is this. And then you go, let's say 3-1. You earn it. Pretty simple, right? Straightforward trade, 3-1. That gives you what? 2.5%. You just need to win another one in order to, make even more money. And the next one actually came like 10 minutes afterwards. Because again, the 50 RSI is actually being reached right there. You can even choose a lower stop loss based on this highest point. And again, 3-1. There you go. 0.5% risk, 2.5% in profits, right? It's actually 1.5. I'm sorry. So that's 3% right there. Quite simple, right? Now, what is it that you do? You wait for the next trade. And it could be on a different pair, of course. But if you actually take these 3 trades, which are all from within 24 hours, we're looking at what? A 4.5. Well, this is a 4-1, so it's at 2%. We're looking at exactly 5% balance profits, right? In one day. Now, does this happen all the time? I mean, I'm going to be super rich because I know the strategy. No, it doesn't happen all the time, right? But you got to take advantage of the day that actually happens. All right. So that's my biggest advice. Go ahead and check it out. Try to test the strategy on TradingView, back tested, and so on. And more importantly, tried it on demo on your demo account. And I think once you actually get to master it, you're gonna realize how trading is super simple. It's not as complicated as some gurus actually try to sell it to you. So yeah, that's what I wanted to teach you today. Hey, but before I finish with this video, I wanted to give you a warm invitation to my BLW Forex copy trader. Even if you understand this strategy or not, but if you're a complete beginner in Forex, or you don't have the time to trade with Forex, I want to recommend you this, which is my copy trading service. What is it that we do? Basically, we analyze a team of 3 people. We analyze the market, we place the trades on our trading accounts, and if you're part of it, all of those trades can be copied into your broker. That's quite cool, right? So what is it that you need to do? It was actually quite simple. Go to blwforexcopytrader.com, join us, and you will be added into the copy trader. You won't have to do anything else. We're gonna take care of you. All you gotta do is just keep on looking at your account on a daily basis in order to see the movements, and that's pretty much it. So the invitation is right there. Go to blwforexcopytrader.com. Hey, so hopefully you enjoyed the content of this video, and if you did, go ahead and smash the like button to support this YouTube channel. But more importantly, if you have any questions or comments to share, you can always use the comment section below, and my team will be happy to reply to you. Thank you for watching this video, and I'll see you on the next one.